Everybody, it's Ian Beamer, Guaranteed Rate. Happy June. Welcome to the official start of summer. For those of us here in Chicago, we are plagued by Canadian smoke, and the Cubbies are back from England, so 2-game split with the Cardinals. So lots going on in the housing market this month. We did get the consumer price index numbers back earlier this month. They've showed that inflation is slowing down considerably. We went from 4.9% rate of inflation for April, which we got those numbers in May. And then the May numbers that just came out this month showed we're down to just 4% inflation, 4% CPI. So that's a great sign for inflation slowing down, for these higher interest rates doing what they're supposed to do in slowing spending, slowing inflation. So the very next day, however, we did get the Fed announcing that they were not planning on cutting interest rates, at least in 2023. In fact, they may consider raising interest rates 2 more times. They didn't change rates at this month's meeting, but they do expect to raise rates 0.25% at our next meeting, and probably skip a month or skip a meeting, and then possibly raise another 0.25% before the end of the year. So possibly 2 more rate hikes. We're expecting another 0.5 point total for the year, and then rate cuts in 2024. So we'll see. We're obviously going to get more consumer price index numbers, more inflation numbers, more jobs numbers, all of this information showing that if this trend continues, that inflation is slowing down, that the labor market hopefully is softening a little bit. And the labor market is still red hot right now. Unemployment is still very low. But if that changes, I do think the Fed may reconsider at least hold off, hold steady without any cuts. Right now, they're planning on 2 more. We'll see what happens. As far as what that means to the housing market, we talked briefly last month about the consumer or the confidence of national home builders and the fact that they're pulling more permits now than they had been in the last probably 18 months or so. And all of these factors kind of lead to the perfect storm for builders, for national builders. We've got home price appreciation, record highs. We've seen home prices of new construction here in the Chicago market appreciate 11.5% in the last 12 months alone. That's almost 1% a month appreciation in new home construction prices. So prices are going up. The cost of money, again, assuming you're pulling permits today, it'll take you about a year and a half to build that home. The cost of borrowing money next year should be lower. And if they're lowering rates next year, they do expect a softer employment market. So the jobs numbers should be down, meaning labor would be cheaper next year. So all these things leading towards kind of the perfect storm to have them start building again. Hopefully that'll give some relief to the very limited supply we're seeing. We do need the builders to build and step up their production of single-family homes, multi-family homes, apartment buildings, etc. We do still have a significant shortage nationally, several million homes short of current demand, which is why we're seeing homes, despite interest rates being up, homes are just getting bid on, multiple bids, tens of bids, 15, 30 bids per listing, even with interest rates hovering in the mid to high 6s, maybe even low 7s, depending upon what program you're looking at. So hopefully some more inventory leads to that returning into a more normal market, and we'll see interest rates return to normal. Appreciation should slow down. Again, we're looking for homes to appreciate about 4, 5, 6% a year. That's about average. So if we can get closer to that benchmark, I think we'll have a healthier housing market. So lastly, I just wanted to leave you guys and thank all of you for nominating me for the Daily Herald's Mortgage Lender of the Year in 2023, the Reader's Choice. I do ask you, now that I'm nominated, to step up one more time and help me out with actually winning that award. So there's 5 finalists. I am one of those 5. If you could please just take a minute, click the link. Just you can actually vote every day if you'd like to. I'd be tickled pink if you voted for me even once. But if you find yourself on time or you're viewing this message more than once, by all means, click again if you've got a minute. But I do appreciate it. The links are in the email. Appreciate you checking this out. Let me know your thoughts. Look forward to hearing back from you soon. Have a great day.